Hey everyone, I'm Lewis and welcome to my YouTube channel. On this channel we're going to be talking about money, investing and personal finance. In today's video I'm going to be going through my investment portfolio update for December 2020, a beginner's portfolio worth around £3,800. So let's get right into it. So before I get started with this video, I need to put a disclaimer out there. So my portfolio, the Lewis Harding portfolio, any investments in there, any buy or sell decision are not a recommendation to invest or not invest, and this portfolio and this video should be just seen as a source of information and education. And as always, you need to do your own research, and as well as that, if you're not sure of any investment, you need to get in touch with a regulated financial advisor. And if you need to do so, drop me an email, I can put you in contact with one. Now onto some details on my portfolio. So I started this portfolio on the 1st of March 2020, and that's when I'm recording from. I'm looking to benchmark against the FTSE All World Index, so I'm looking to track my performance compared to a world index fund, to see how well my investments are doing compared to it. As well as that, my target allocation. So basically what this is what I'm wanting my investments to look like going forward, and it's going to be my aim for my allocation. So what I'm looking to do is have 30% in individual stocks, 30% in a all-world index fund, 10% in the FTSE Emerging Markets Index Fund, 10% in the MSCI China Index, so that's a Chinese index tracking the China stock market, 5% in the MSCI India Index, which is the India Index, and then 5% gold, in a gold ETF, and then 10% in Bitcoin. So as you can see from the graphs and tables I've put onto this video, my portfolio value is £3,832, and I'm currently up 13.3% from the 1st of March 2020 to the end of December 2020. Compared to the FTSE All World Index, that index is up 26%. So I'm actually lagging behind at the moment. A lot of that is to do with me holding a large cash balance, which I will go on to in this video. So yeah, what I'm holding, my allocation at the moment, as you can see, is I've got a decent amount in stocks, gold and Bitcoin. My allocation to gold and Bitcoin is over what I would want it to be. However, Bitcoin has had a bit of a crazy rise over the past 6 to 8 months. And I'm a buy and hold long-term investor, so I'm not planning on selling anytime soon. And when gold dipped back in November, I decided to buy more gold through the Royal Mint ETF. That's the way I'd like to hold gold. I'm mainly holding Bitcoin and gold as a hedge against currency failure. Now on to the stock picks. So I am a big fan of owning stocks. I believe it is possible to pick stocks and outperform the market, no matter what some people say. I've got 3 main characteristics I'm looking for in a stock. So the first one is good management. They have a good management team leading them into the future with a long-term mindset. Actions, what they take, you can decipher if they are good management or not. I think it's very, very key and important. People like to look at the numbers, but if they don't have a good and solid management, they're not going to go anywhere. And a bad management can easily take a good company into a bad company within a few years. Point number 2 would be the financials. Like I say, I have quite strict criteria in my financials based for stocks. So they need to be very profitable. They need to have good balance sheets with minimal debt compared to their size. And we need to be free cash flow positive, with that growing year on year. And then number 3 is, it's a bit of a general one, but I like a good brand. I think having a good brand, a lot of intangible assets, that is a very key part to having a competitive advantage and a large moat, as Warren Buffett would say. An example I would give would be Coca-Cola. Like, their brand is basically indestructible. So yeah, that's what I look for in stocks. And looking at the stock picks, I have a combination of growth companies, dividend companies, value companies, as you'd say. I don't really care about them 3 different things. I just value a business based on its cash flows, no matter the size or how much it's growing. So yeah, Berkshire Hathaway is one of my major holdings. I'm a big Warren Buffett fan, I must admit. He's probably my main inspiration. Then going on from that, I've got British American Tobacco, Biogen. I've got quite a few stocks which I've added this month compared to the past few portfolio updates. So yeah, I'm not going to go into much detail about my individual stock picks, but I've shown them. I've got them shown on the chart, which I'll add on this video as well, and how much they're allocated, as well as their gains or losses for this month. One thing you'll notice with my portfolio is that I've got the majority of my money in cash still. So yeah, I've got around 52% as of December sat in cash. Basically, my thinking behind this is that at the moment the stock market has rallied due to the issues that have been happening this year, and I personally think that the stock market is quite overvalued and disconnected from what's actually happening in the world. So such as the S&P 500 is now at all-time highs. Emerging markets have rallied very well, but I also think they are a bit, ahead of themselves. So like I say, I'm very reluctant to put my money, big money, into the indexes when I think they're overvalued. So my strategy going forward is basically to strategically invest in individual companies, and then when we potentially see a market correction, say 20-30%, I will then be putting the majority of my cash into the indexes. And going on from this month, I'm going to be adding more cash into my portfolio, meaning that I'll be very ready if and when that happens. It's impossible to know if this will happen, and anyone who says they do know that is lying, because if they did, they'd be very rich. But like I say, going from what history has been saying, the historic price to earnings ratio of the S&P 500 is 16, and at the moment it's above 30. So to me, that screams overvalued. Like I say, we've just got to wait and see for that, but that's why I have my large cash balance. Moving on to the additions for this month. So this month I've added 3 different stocks to my portfolio. So stock number 1 is called Realty Income Corporation. You might have heard of it if you are into your dividends. So this company pays a monthly dividend, which is quite rare. It's usually once a year or twice a year max, depending if in the US or UK. But Realty Income are a US company who own real estate, 95% of it in America and then 5% in the UK. And their portfolio of real estate is basically supermarkets, convenience stores, such as Walmart, Sainsbury's, Dollar General and places like that. The reason I've added these to my portfolio is because after doing some research on them, their total compounded return with dividends and their stock is around 15%. And as you know, I'm a long-term investor, which means if I get paid their dividends each month, I'm just going to buy more of their stock. And a 15% return with dividends invested since 1992 or the mid-90s, something like that. Pretty decent, really. Any return in the double figures is good when you're talking about stocks. So yeah, like I say, I'm confident their real estate portfolio will be okay. They've had a 98% occupancy rate with their real estate for 30 odd years. So yeah, I think compared to some other real estate investment trusts, I think they're in a very good position, especially supermarkets are always going to be needed. You're never not going to need a supermarket. So I'm pretty happy with this pick. We'll see how it goes. I think in the short term we could see some damage potentially, but in the long term, like I say, long-term focused investor, investing for 30, 40 years, I think it'll be a good pick. Pick number 2 is Alibaba. So Alibaba are basically the Chinese Amazon, Asia's biggest e-commerce site, and in all honesty, I think they're a fantastic business. I think their growth over the past few years has been fantastic, and I just see it continuing for the next decade or so. One reason why their stock has dropped recently and I've been able to buy is because their ex-chief executive and major shareholder Jack Ma has gone missing in China. So he's obviously, I think he had something to do with the Ant Financial IPO, who Alibaba have a part to do with. He made some comments to the Chinese Communist Party. So yeah, he's currently missing. No one knows where he is. So we'll see what happens with that. But that's one reason why their stock dropped massively. Yeah, because there was some news saying that the Chinese government are going to review Alibaba as a monopoly in China, which caused their stock to drop around, was it 15, 20%? Unfortunately for me, I bought it when the day before it dropped, but even when I bought it, I'm very happy with the price and margin of safety I bought it with. And like I say, going into the long term, I can see them growing at a rate of 12% a year for the next decade. And I think this monopoly talk is a very, I think I'm personally disregarding it because I don't think China are going to, destroy one of their biggest companies, which can, compete with America going forward. Because Alibaba has a lot of growth in the Southeastern Asia, where China have a lot of economies have a lot all to do together. So, like I say, I'm happy with a pick. Very happy to get a growth stock in there because I've been having a lot of dividend stocks recently. I'm picking up Alibaba's shares constantly at these prices. So yeah, we'll just have to see how it goes, and hopefully Jack Ma's comes back soon because I do like him personally, and I think I'm going to pick up his book. My final pick for December 2020 was Unilever. So Unilever are a consumer staple. They're the biggest company on the FTSE 100, and I absolutely love a consumer staple. I think they're a fantastic company to own in your portfolio. Unilever have thousands of brands under their name. They're all over the world: India, emerging markets, Europe, the US, you name it. Their brands are literally everywhere you can think. And one thing I found quite interesting with them, when I started getting into stocks, my dad was saying they are one of the companies, if he was a stock investor, he would invest in, because they've been around forever. Even 100 years ago, I think they merged, the two companies merged, the Dutch company and the UK company merged in 1926. So the company as it is now is nearly 100 years old, and that says a lot about it to me. A company with good brands, they've been around forever, they're consistently profitable. Slightly too much debt maybe, but their debt compared to their size isn't an issue. Like I say, I'm very happy with Unilever. It's a very long-term play, and I think going forward, I'll end up passing these shares to my grandkids because they're going to be here in 100 years' time when I'm not here. In summary, I hope you enjoyed this investment portfolio update for December 2020, a beginner's portfolio. I hope you enjoyed the video. Like I say, this is my first ever YouTube video, so it's going to be very uncut, rough around the edges, but I hope it's decent and fast paced enough for you guys. If you enjoyed the video, please subscribe to my channel, give me a like, a comment, and share the video on your social media platforms. I'd really appreciate it. And finally, if you're interested in getting a free share with Freetrade, I'll put my referral link down below. They are a low-cost broker in the UK, and I think they are a fantastic product. And as well as that, I will put my BlockFi referral code down in the description below as well. They are a cryptocurrency exchange where I hold my Bitcoin, and you can earn up to 8% interest on your Bitcoin. If you sign up for that link, you'll get, if you put $100 worth of Bitcoin onto the platform, you'll get $10 worth of Bitcoin for free. So pretty decent, I'd say. So yeah, if you enjoyed the video, I'll be here every Sunday. So I will see you guys then.